Hello, this is Nataraja. I am back with the top 50 mutual fund analysis, which is typically done on a monthly and annual basis. But this whole exercise is done on a weekly basis because the time is moving. So we take a new measurement point of performance every weekend. So let us go ahead with the presentation. So this is as on August 30th, that last Friday. Let us look at the summary. As you can see that last week, mutual funds had a positive return. The top 50 equity funds gave 6.12% return on average. And hybrid funds, top 50 gave 2.08%. And the top 50 equity funds for the month came up with 44.57% return for the annual basis. Now look at bottom 50 equity funds. Though they had negative return for the month, their return annual basis 58.31, and it's more than the top 50. Why is that? Because many good performing funds have gone into bottom 50 and they have a good annual return data. So this is an anomaly. The leadership change is getting more pronounced with respect to equity mutual funds. How? We'll see it in details. Annual return of top 50 equity funds based on 1 year return 74.01, quite healthy. And most interestingly, entire equity funds universe, which is 888 funds, gave an annual return of 43.23% for the last 1 year, which is extremely impressive. But if you look at the last 6 months, which is less than the half of this. So the best time for the mutual funds may be over. But if you look at the last 3 months, it's better than the last 6 months because double this 13.25 is more than 6 months, and 4 times if you multiply 13.25, it's more than 43.23. So what it means is in the last 3 months, mutual funds have rebounded. Now let us look at 1 month return. It's 1.45%, multiplied by 12 times. Again, this is very subdued because in the last 1 month, mutual funds did not do well. However, last 1 week, they did well, 1.25. So if you multiply 1.25 by 52 weeks, it is pretty impressive. So last week was impressive for the mutual funds in general. Then debt funds, as usual, similar numbers. Commodity funds were positive both for the week and the month, and but negative for the last 3 months basis. And annual and 6 months returns are pretty impressive. The overall mutual funds, which is 1,649 funds, is 28.91. So this includes hybrid funds and debt funds. So your portfolio should do better than this. If you're not getting better than this for the last 1 year, there's something wrong with your portfolio and you need to make adjustments. And this weekly reports are helpful for you to make portfolio rationalization. Now let us look at the monthly top 50 within the equity. Now the one in green are White Oak Capital Pharma and Healthcare Fund with 9.78% return for the month. And the other ones are UTI Healthcare Fund, HDFC Pharma and Healthcare Fund, Mirae Asset Healthcare Fund, Tata Nifty Mid Small Healthcare Index Fund, Tata India Pharma Healthcare Fund, ICICI Prudential Pharma Healthcare and Diagnostics Fund, ICICI Prudential Nifty Pharma Index Fund, Nippon India Nifty Pharma ETF, Motilal Oswal BSE Healthcare ETF, Edelweiss ASEAN Equity Offshore Fund, Bandhan Small Cap Fund, HDFC Technology Fund, Bandhan Focused Equity Fund. Now, these may not have very impressive annual return because these are the new leaders. However, the highest annual return among the green ones is 62.56 by ICICI Prudential Pharma Healthcare and Diagnostics Fund, which is quite impressive. Now we are looking at the bottom 50 on a monthly basis. Why do we do that? This is to recognize potential bearish reversal. How do we do that? Within the list we look at above average returns marked in bold black. Then we mark below average return for the week and month. Whichever fund has above average annual return but below average weekly return or monthly return, then marked in bold red, because these are potentially correcting and going to bearish phase. So if you are holding these funds, you have to be careful. You have to evaluate whether you want to book the profit or hold on with the risk of further erosion of gains. And some worthy mentions here is Motilal Oswal Nifty India Defense Index Fund, HDFC Nifty PSU Bank ETF, HDFC Defense Fund. I want to mention about HDFC Defense Fund. It has been coming in this list so many times. Now it has reduced to 89.67. It used to be 147% annual recovery, annual returns. So people holding these funds are crying. Samco Special Opportunities Fund, Quant Infrastructure Fund, Motilal Oswal Nifty Realty ETF, UNESCO India PSU Equity Fund, HDFC Nifty Realty Index Fund, Tata Nifty Realty Index Fund, Bandhan Infrastructure Fund, Nippon India Power Infrastructure Fund, UNESCO India Infrastructure Fund, ICICI Prudential PSU Equity Fund, Quant Consumption Fund, Mahindra Manulife Manufacturing Fund, and finally Quant Large and Mid Cap Fund. They all have risk of further erosion, so watch out. So next is equity annual top 50. Only two funds made it to the green: LICMF Infrastructure Fund, Bandhan Small Cap Fund, LICMF 80.07% annual return, Bandhan Small Cap 76.48, better than last week numbers. CPSE ETF this time moved into orange or amber category because it had a below average return for the last 1 month. Equity annual bottom 50. This is to highlight potential recoveries, bullish recoveries. This is done simply by looking at above average return on a 1 week and 1 month basis. So the funds with the better than average 1 week return or 1 month return are identified. Just to get a feel here, nothing to mention except these bank ETFs. Nifty bank ETFs are all showing recovery. It doesn't mean that they're ready for investment. Their annual returns are going up and they're all in recovery list. So that's a good news for them. Maybe the worst is over for them. Hybrid mutual funds, monthly top 50. The one in the green are Bandhan Hybrid Equity Fund, Union Children's Fund, Axis Retirement Savings Fund, UNESCO India Aggressive Hybrid Fund, Axis Retirement Savings Fund, Navi Aggressive Hybrid Fund, UTI Aggressive Hybrid Fund. Highest return for the month was by Motilal Oswal Multi-Asset Fund, 4.93%, but it did not make it to the green list. Among the green ones, highest annual return is by Axis Retirement Savings Fund Dynamic Plan at 43.57%. Now looking at hybrid annual top 50, the one in the green are JM Aggressive Hybrid Fund, Bank of India Mid and Small Cap Equity and Debt Fund, Axis Retirement Savings Fund, UNESCO India Aggressive Hybrid Fund, ICICI Prudential Equity and Debt Fund, Axis Retirement Savings Fund, Aggressive Plan, Edelweiss Aggressive Hybrid Fund, Mahindra Manulife Aggressive Hybrid Fund, Union Retirement Fund, UTI Aggressive Hybrid Fund. The best annual return is Quant Dynamic Asset Allocation Fund, but it is not having consistent returns, so it is not getting any green color. Among the green, highest is JM Aggressive Hybrid Fund, 52.32%. Finally, Commodities Fund. If you notice, there is no green status among commodity funds, though there are positive returns for the month and the weekly basis, but many 3-month returns are still negative and only amber status. So there is always a tug of war for leadership here, because some funds which are doing well in 1 week, they do bad next week. So there is a distinction. For example, in the bottom, you can see these funds did above 20%. And the ones which are on the top list are having lower 6 months return. So there is a pattern of investment here. You can notice. But anyway, I am not into commodity funds nowadays, because for me, risk and reward are equally distributed. I need reward at least 2 times the risk. So this is just an exercise for those who are invested in commodity funds. So standard disclaimers applicable. This is just a performance analysis, not a solicitation nor a recommendation for investment. You need to do your own due diligence for your investment decisions. You can read my blogs, which come first, then the video. Video is made for people who don't like to read. The blog is at Nat Fun Corner at Blogger, which is natfuncorner.blogspot.com. Now, then there are many other platforms where social network platforms, I put these blogs and videos, but I'm also in day trading and short-term trading. So we have a peer group here. You can join this WhatsApp group if you want to be part of daily discussions about trading. You get a pressable link in my blog. This week's blog, you can press this link. So I am not doing only mutual fund investment. I am also in the stocks, that too with the day trading and short-term trading. So that comes to the end of this bulletin. I hope you get the pulse of the mutual fund market based on this analysis. So I will see you again with an update next weekend. So until then, have a good one. Thank you.